Welcome, dear traders, it's me, Kate Stichina, and you're watching a recap of the Asian session. Australian and the Japanese stocks began to last the full trading week of 2022 with a drop. Last Friday, Wall Street extended its two-day losing streak. The main stock indexes fell to their monthly lows. Usually, the US dollar benefits greatly amid such market conditions. However, this time the situation is a bit different. Watch our video review and find out why. Let's start. Apparently, investors are certain that the global economy is sliding into recession. Pessimism came to stock markets after a series of hawkish remarks from top central banks. This was the main reason for the decline. The Fed and the ECB pledged to raise key rates higher than previously expected. There are also rumors that the Bank of Japan may change its ultra-loose stance at its meeting. Notably, the regulator has been sticking to monetary easing for a long time. So, stock markets have been gripped by bearish sentiment since the middle of last week. The sentiment has turned sour even more due to new comments from policymakers and the fresh macro stats. For instance, the US PMI indexes shrank more than expected in December. A Santa Claus rally, which usually occurs in mid-December, thanks to festive mood and optimism, will hardly take place this year. Traditionally, stocks are rising in the last 2 weeks of the year. It has occurred 11 times over the past 15 years. Remarks of the Fed policymakers made last week also undermined bullish sentiment. I don't quite know why markets are so optimistic about inflation, San Francisco Fed President Mary Daly said. She also added that the Fed is strongly committed to bringing inflation to the 2% target. Cleveland Fed President Loretta Mester shared the same point of view. Last Friday, she confirmed that the regulator would maintain aggressive tightening. In her opinion, rates should be raised higher and remained at these levels for a long time. Fed official John Williams also warned market players against excessive optimism about lowering the interest rate. The central bank is likely to hike interest rates to 5.1% in 2023, which is higher than previously planned. Jerome Powell also hinted at such a scenario last week. As a rule, the US dollar climbs amid hawkish comments of the Fed officials. However, it kicked off the Asian session on a pessimistic note. Its appeal as a safe haven asset has been hurt by the likelihood of a recession. It's also unable to assert its strength versus its main rivals, and this is why the US dollar index has already dropped to 104.40. In the morning, it was moving in the intraday range of 104.40 and 104.80, gradually declining. Traders wonder whether it will be able to rebound as it did last week. If it does, it could start a steady rally, rising significantly versus commodity currencies. The greenback dropped the most against the yen. It appears that the yen has the chance to get rid of the status of the worst performing currency in the basket. Today, Prime Minister Fumio Kishida announced that the government is planning on revising a decade-old accord with the Bank of Japan. This accord obliges the central bank to bring inflation to the 2% target as soon as possible. Fumio Kishida will discuss details on how to revise the statement with the new Bank of Japan governor. Kuroda's term will end only in April. Until then, there will hardly be any drastic changes. The Japanese currency jumped amid such positive factors, although there are long-term wounds. It has risen by about 10% from a recent low amid a narrowing yield gap between US and Japanese government bonds. In the Asian session, the dollar-yuan pair was rather volatile, fluctuating in the wide range of 135.80 and 136.70. It approached the level of 135.90. As a reminder, the pair has been trading for the most part of the year around 151.95. The Bank of Japan had to make several interventions to stabilize the exchange rate. The regulator will announce its rate decision tomorrow. However, investors are not expecting significant changes. The Australian dollar is up today, primarily amid the greenback's weakness. What's more, oil prices are rising. Oil futures climbed today as China is planning to purchase more oil. It fueled optimism in Australia as demand for Australian commodities could increase again in China. The latter remains the world's largest importer of energy commodities and Australia's main trading partner. And this week, the economic calendar for Australia is eventful. It makes the Aussie extremely vulnerable, especially if the Reserve Bank of Australia makes any statements. Although analysts do not see any reason for steady growth of the Aussie in the coming months, today the Aussie pair is growing. It's moving in the price corridor of 0.6683 and 0.6732. It has already advanced to 0.6719. The Kiwi also started a new week with gains. The NZD-USD pair grew to 0.6388. Of course, the Kiwi will not be able to rise versus the greenback for a long time. This is why its growth within the range of 0.6368 and 0.6398 is likely to be short-lived. The price may try to break through the resistance level of 0.6512, and if it fails, the pair could decrease to the correction level of 0.6103. Despite the upcoming holidays, traders are bracing for a rather busy week. The United States will unveil personal income and spending data. Japan and Canada are going to reveal their inflation figures, and several economic reports from the Eurozone, Germany and the UK are also on tap. And that's all for now. Subscribe to our channel and keep close tabs of market developments with us. See you soon.